based upon how the bond market is performing, all those asset classes will be impacted as well. Now, the more bond market you have to follow very carefully. What I feel that everything is linked with them from the other market and other asset classes as well. So, for example, whether it is equity or it might be gold or it might be other commodities, based upon how the bond market is performing, all those asset classes will be impacted as well. So, for example, in case of you have more supply of bonds in the market than demand, in that case, normally what central banks do across the globe, they try to create demand by printing money, and that way they can create the demand for the bond. But at the same time, because they are printing more money, the inflation will go up. So if you have seen the trend across the board in last 1 to 2 years, the inflation is going high in many of the countries, including US, which is a very developed country, and inflation is something which is considered uh, very high when it comes to the capital which they have available for investment and other things. Normally US has low interest rate for years and years, and they are actually reducing, but still they have high interest rate because they want to keep those demand supply balance in the market, and based upon that they are not lowering the rate, and ultimately the economy is getting little bit suffering. And but the valuation of the dollar and everything is intact, right?